This is the Daily Market Rundown live from the Tradelo trading floor. It's June the 17th. Some highlights from today's show. Trump signals escalation is incoming. Gold is a key risk barometer. And the SPX suggests we stay pegged in a narrow range. A good day, traders. A happy Tuesday. Let's get stuck straight into looking at some of the overnight markets. I think Europe, of course, is leading to the downside with the DAX down 1.4. Now that matters because, of course, we know, if you've been following this show all year, that the DAX is the star outperformer as we see these flows exiting the US, moving into Europe. And we'll talk a little bit about that theme in a moment because we are actually going to cover the euro dollar chart and talk a little bit about how that's acting as a very good safe haven asset class. But the key takeaway is when the strong market is weak, we do need to pay attention because perhaps it suggests there's a little bit more aggressive profit taking as a result of some of the headline news that we have received overnight. Now let's discuss that and get straight into our first topic, which is very much about ultimately what Trump has told us. He's revealed the playbook again. He obviously left the G7 ahead of schedule last night and very intentionally. This is the interesting thing about Trump as we're learning about him in real time. He's very intentional with what he says. He doesn't mince his words. He tells us ultimately what comes next. And it's very important we start to listen to this because it does actually give us some front run opportunities. Now, what he's ultimately said is a number of things. First of all, he said that he predicts that Israel will not slow up. Now, he's not predicting that. He's telling us they're not going to slow up. They're on a mission to fulfill a mission, which is to denuclearize Iran. And they're not going to stop until that's done. Okay, I think that's the key takeaway. This will be ongoing until such a point that certain objectives are met. Okay, so this is not going to end anytime soon. And obviously there was an article out this morning about some of the shipping costs that have now increased quite aggressively as a result of higher insurance costs. So again, the longer this goes on in the Middle East, the longer this doesn't go away, the more likely we're going to see oil prices sit higher, as well as obviously freight prices sit higher, and at some point that's going to start to feed through into PPI and as well as CPI. Okay. However, the key takeaway is that this is not going to end anytime soon. Now, what is interesting is Trump went on to say that ultimately he expects in the next 2 days, okay, very important, he actually specifically said in the next 2 days we're ultimately going to see something. Okay, we don't know what that something is, but there's a lot of speculation out there now that ultimately what's coming is perhaps some bombing in terms of bunker bombs. So really taking out any chance that Iran has of developing a nuclear type of bomb. And so that's the key takeaway.
Criticised the German government's pension plans. And
ultimately,
that Germans
we want
should
to
work longer as they live longer. To counteract
There we go. Apologies for that. Ultimately, we want to really understand now, if they are going to launch this all-out attack and take out any capability that Iran has. Now, if they do, I think that's important, okay? If we are going to get these, B-2 bombers that are going to be these stealth bombers launching bunker-busting bombs, there is going to be a little bit of risk-off, simply because we don't actually understand the implications or the retaliatory measures that Iran will take. Okay, right now, I think the general assumption is that because of how Iran is responding to Israel, which is sort of almost a like for like, there's no real escalation from Iran's side. It's more you shot missiles at us, we shoot missiles back at you. Now, what happens when those bunker-busting bombs get launched? If they get launched, we don't know. That's the big question mark. And so if that was to be the case over the next 48 hours, the market's probably going to be a little bit risk-off. It's probably going to want to stay risk-off until it understands what Iran's next step is. Okay, do they negotiate or do they now launch more of their supersonic missiles, more of their weaponry that we don't yet know about? Okay, now obviously when I say we know about, I'm talking about the great masses. We don't actually understand the full scale of this. There are people that are far more on the know in terms of information. So you have to be very careful assuming you know anything and just make sure you follow price. Okay, so the key takeaway is right now, if we look at today, and this is the key, We look at today, look at how the market's responding. They're not actually showing this concern of bunker busting bombs. Okay, if they were, gold would not be down on the day. And we'll talk about that chart in a minute. Okay, so that's the key takeaway right now. Something's coming in the next 48 hours. We don't know what it is. We know that the US is very well informed. Trump is very well informed, and he is in the know of what's coming. We also know that Iran's Revolutionary Guard came out on today, and they say a more powerful new wave of missiles was recently launched towards Israel. Now, again, like I said, so far, all right, what we have seen from Iran is more, sort of a response to Israel's attack as opposed to an escalation on Israel's attack. And that's important to stress because we've not yet seen an escalation from Iran. Now, what are the implications should the US launch B-52 or B-2 stealth bombers? Well, look, we know Iran could strike military bases. We know that will be an escalatory type attack. We know they could cause problems in the Strait of Hormuz. We know that will be escalatory in nature, that will cause problems. And of course, we know that a next step could be some form of an attack on some energy facilities in Iran. Okay, so we know there's a number of escalatory type attacks that could take place. And so it's just very important to be switched on to what they are. Okay, right now, just shooting missiles, like I said yesterday, is not sufficient for the global markets. Okay, global markets, of course, want to know if there's escalation. Now, one thing I would say, and this is very important to stress, once the bunker busting bombs are launched, okay, and again, I always have to caution to say that I know I'm talking very loosely about bombs being thrown around, and that's not intentional to show any kind of disrespect. It's more a case of once those bunker busting bombs are launched and ultimately the mission is complete, which is we've taken out their capability to ultimately form a nuclear bomb, the reality is we are closer to the end of this than we are to the beginning. Okay, and that's important to understand because should this happen, should the bunker busting bombs be done, it's not necessary that we are going to get escalation. That could be the end of it. That could then be a mission complete, and we can then ultimately get to the truce discussions, the discussions about what comes next, and all of that is actually quite positive for the markets, okay? Because we clear that hurdle, we clear that key risk. All right, so just important to stress, once those bombs go fine, there will initially be a risk-off move for sure because we don't know what comes next. But ultimately, big picture, it will be de-escalatory in nature because the mission is done. The job is done, which means we should then start to see that risk premium come out of oil, out of gold, and ultimately we should see the equities then ultimately not necessarily sell off, but not necessarily bid up either, but the risk disappears. Okay. Now let's talk about some of the key markets. I think one of the key takeaways here is gold. Okay, we can see outside day. An outside day after 4 days of escalation, it very much does point to a situation where it's not that it's not risk off, it's just that the risk off is perhaps not as aggressively being priced. Okay, right now we can see gold is a little bit vulnerable to the downside. It's one definitely to watch today, particularly on the cash open around that 1:20 p.m. London time. Watch that just for a little bit of a splash lower, but very, very careful. This is not a market you want to be aggressively shorting until, of course, we get some form of resolution. Okay, it could very well be the case of we have a little bit of a splash down, retrace, and then tomorrow begin that process of moving back up towards that 34.50. Okay, the point is that gold right now, very clearly yesterday did not show any signs of strength when in actual fact the fundamentals suggested it should. Okay, now with that in mind, if we kind of go along that same line of thinking, the fact that gold is offered today with the equities being down as much as they are does suggest that those equities are vulnerable to a short squeeze. Okay, wouldn't be shocked if we do trade unchanged in the equities today, and we'll talk a little bit about that structure in a moment. But just moving on to the oil chart, I think oil is a key sort of proxy as well in terms of what's going on. We can see we're very much inside this, call it Iran-Israel attack range. Okay, obviously we started on Friday on this day, and you can see on Monday we sold off pretty much the entire day, retraced the entire Friday move, and we now sort of almost smack bang in the middle of that range. Okay, yes, there is still a risk premium priced in of around $6, call it, in oil, so the market is not giving up those $6, but like I said, B-2 bombers, stealth bombers get launched, they take out nuclear capabilities, fine. We're probably going to test in that high made both on Friday and Monday. Fail there again, like I said, it's more likely we're closer to the end of this than the beginning. Okay, in that case, we could very well see over the next couple of days and weeks oil move back down towards that 65. But like I said, this doesn't seem to be ending today or tomorrow. This perhaps is going to continue on for the rest of this week at least. And then we need to just follow the information to understand, is this got long-term implications or not? Okay. Now moving on to, of course, the euro. Very interestingly, we can see the euro is also held on to those gains from last week. So we can see the euro is acting as a risk-off proxy as well. It's very much unchanged over the last 3 sessions. And we can see, of course, it is sitting at the highs of the year, that at a time when, of course, the escalation is going on in the Middle East. Now, I think the reason the euro is interesting is because, like I said in the beginning of the show today, was if we look at the DAX being the strongest, best performing, sort of equity index in Europe, that is a result of flows moving out of the US, diversifying their way into Europe. And of course, a byproduct of that is going to be a stronger euro. Okay, so we can see euro is a go-to risk-off proxy in the same way that people are buying gold as a hedge. They're also buying the euro as a hedge. So keep a close eye on that. But one thing I would say is, of course, we have now effectively double topped on that yearly high. Should we see de-escalation, okay, be cautious to the downside. This market could just wash out some of those week longs. But ultimately, in terms of big picture, we are going to be moving to the upside over the coming weeks and months. Okay, now let's turn our attention to the key play of the day. It's very much focused on the equities. Of course, we've got the roll to contend with. We know the ES, the Nasdaq, the Russell, the Dow, they're all rolling into the September contract now. So we have to be cautious with those flows. One thing, if you were trading yesterday's session, when we got that little bit of a sort of a truce commentary or truce headlines towards the afternoon session, if you noted, the equities didn't really showcase the same kind of volatility as the gold and the oil did, and that's for good reason. We are sat bang between some very key expiring gamma levels. Now, very interestingly, if we look at sort of where the gamma looks like in terms of the monthly expiry, which is the orange, versus everything beyond the monthly expiry, what we can see ultimately is there's a very large positive amount of gamma that is set to expire at the end of this week. Okay, now what does that mean in very, very basic terms? Well, the market right now is hedged and it's stuck around that 6,000 level, and that's simply got to do with the nature of a market that's very much hedged as a result of market makers having to buy around the 6,000 level. Okay, so they have to buy that level ultimately given what's going on in the option space, and as a result of that, the market's pegging itself around that 6,000 level. Now, what happens after the OPEX is that clears away. Okay, all that positive gamma disappears due to the expiry, and as a result, we then have a somewhat more negative gamma around that 6,000 level. In other words, what's previously support being held up by forced hedging ultimately disappears after Friday, and then we have what they call the window of weakness. It's that sort of, the market's a bit vulnerable ultimately, and should we get below that 6,000 level, there's very little in the way of support all the way down to around 5,700 in terms of gamma. Okay, obviously there's multiple different participants that support the market, but in terms of the gamma and the hedging that comes as a result, there's not a great deal of support up until that 5,700 strike level. Now, to zoom in a little bit to today and look at the 0 DTE, what we can ultimately see is a very interesting strategy that's been revealed to me called a Captain Condor. I'm not going to pretend I understand why it gets done. You can go read up about it. But ultimately what it showcases is two very, very clear sort of significant levels of gamma exposure. Now, the key takeaway for us as traders is you can see very positive gamma around, it's 59.90 in essence, all the way up to 60 effectively. Okay, and what you can see ultimately is that hedging is going to support the market at that 59.90, and it's going to ultimately resist the market at 60.60. In other words, we're going to stay pegged. Okay, that's the point of this. The market's going to really battle outside of these two zones simply because of the amount of hedging that's going to take place at 59.90 and 60.60. Now, keep in mind this is an SPX price. For the ES prices, just add on about 10 handles. Okay, so 6,000 and ultimately 6,070. Right, resistance is 6,070, support at 6,000. Now, what's interesting and to take away from this as a trader is we will be pegged here unless we get some information. Okay, if those B2 bombers get launched today, the reality is that downside 59.90 is going to get tested quite aggressively, and what sits below that, just 5 points below that, is quite a negative gamma. In other words, that level of 59.90 is aggressive support, but the moment we trade through that and we get below 59.85, it's going to turn to very aggressive selling. Okay, in other words, forced selling. Now, if you're watching the S&P yesterday, you would have noticed two blip ups just after the cash open. Okay, that was the result of these hedging. All right, so what you would see typically below 59.85 is perhaps a very quick fast money move, call it 20-30 handles to the downside, as we do see those dealers forced ultimately to sell at the market prices. Okay, same to the upside. Should we scale above 60-65, you will get that stop run to the upside, very similar to yesterday. Okay, so the key play is pegged between 59.90 and 60.60. You get above 60.65, you get a below 59.85, it turns into a very aggressive breakout play. That is the strategy that we're going to deploy as day traders. That's what we're looking for. Until then, of course, like I said, it's probably going to be a session stuck inside this range. Now, one final note, of course, like I said earlier, the fact that gold is down on the day, the fact that VIX is now filled in the Monday gap, just watch the VIX very closely. I suspect we are going to get some of that overnight short inventory tested. I do expect when the cash market opens, we'll see that S&P float its way back up the page towards that 60-50 resistance. So keep an eye on that. Okay, so long as we don't get any escalation over the next couple of hours, I do suspect a little bit of a squeeze in the open. But like I said, this is not a trending market. It's a sideways market. Pick your fights. Support at 59.90, resistance at 60.60. All right, with that in mind, of course, we do have some data out today. It is the US retail sales, which will be closely watched. Of course, we know the US consumer drives a lot of what goes on in the US, and we know they're fragile. So just watch that just in case. We, of course, also have the FOMC rundown today at 5 o'clock. It will be live on this channel, so make sure you don't miss that. You can, of course, ask questions and all that during the show. Otherwise, if there are any other questions, do post them in the Discord channel. Otherwise, good luck out there. Manage that risk. Go make some money.